Bali is a bad market. And it's not always because someone is intentionally trying to mislead you. There is a very high chance that the ROI numbers shown by developers will not reflect reality. And unfortunately, this is not rare. It is a systematic issue within the market. I personally bought one of these units as well, so I do understand what I'm talking about. And many people think it's the biggest risk. In reality, it's not. The much bigger problem turned out to be legal and structural risks. And in Bali, this matters a lot. If you think buying property in Bali is an easy 15% annual return in almost any project, there is a very high chance you will lose your money. And the problem is not you, the problem is how this market actually works. My name is Anton. For the past 3 years, I worked inside some of the largest development companies in Bali, represented projects at international real estate conferences, and sold over $25 million worth of property on the island. During that time, I saw the market from the inside, how investment presentations are created, how project returns are calculated, and how projects are positioned to investors. At the same time, I also invested in and resold several properties myself, so I have personally gone through many of the mistakes that most investors in Bali made. Today, I work independently on the investor side. My goal is not simply to sell you a property, but to help you choose a reliable asset, one that actually gets completed and ideally delivers strong long-term returns. And this video is the beginning of a short education series about Bali real estate investing that can potentially save you hundreds of thousands of dollars and weeks of painful searching for the perfect property. In just 5 short videos, I will break down when investors actually make money in Bali, where they lose money, and how to choose the properties that won't become a problem in 2 or 3 years from now. No marketing, no illusion, just how this market really works. So, let's begin. In the first video, I want to focus on the biggest mistakes and risks that most investors face when entering the Bali property market. And the first major issue is unrealistic expectation around returns. There is a very high chance that the ROI numbers shown by developers will not reflect reality. And it's not always because someone is intentionally trying to mislead you. The bigger issue is how these projections are actually calculated. In many cases, developers simply look at 5-10 nearby properties, check their nightly rates and approximate occupancy, and build a financial model around those numbers. But this calculation usually ignores several critical factors: the rapidly increasing competition in the area, the quality and uniqueness of the product itself, and most importantly, the management company. For example, a neighboring project may achieve significantly higher rental rates simply because it operates under a strong international hospitality brand with an established service system. Meanwhile, your property managed by a small local team simply cannot deliver the same operational standards or pricing power, and that immediately impacts your real return. But there is an even bigger problem. Very few developers analyze the market at scale. Not 5 or 10 comparable properties, but 100 or 200 units across the area. Very few projections take into account how many new projects are currently under construction nearby, or where rental trends may move over the next 3 to 4 years. And in Bali, this matters a lot. Because if dozens of similar projects are built within a 5-10 minutes radius, your property may enter the market in 1 or 2 years later into a massively oversupplied environment. And in that scenario, actual returns may end up 10 or 20 or even 30% lower than originally projected. And this is the current reality of the Bali market. Let me give you a real example. Back in 2023, one of the hottest investment products in Bali was a small studio apartments in Canggu. At that time, the concept genuinely worked. Supply was limited, demand was strong, and projected returns were often in the 12 to 15% annual range. Entry prices were relatively affordable, and investors entered this segment aggressively. I personally bought one of these units as well, so I do understand what I'm talking about. But then something very typical happened. Developers saw saw the demand and began replicating the same product everywhere. Within just 1 or 2 years, dozens of similar projects entered the market. By 2025, supply in this segment had increased dramatically. As a result, returns compressed closer to 10% and continue trending lower. And even achieving 10% often depends on entering the project at a very good price. Friends, if you are seriously looking for income-generating real estate in Bali, just a reminder that I regularly get access to distressed deals. These are situations where investors exit projects and sell below market value, sometimes even cheaper than the developer. One of examples: a 3-bedroom townhouse in Umalas generating $2,000 to $2,500 net per month with about a 90,000 discount. That's roughly a 10.5% annual return. That's a brilliant offer, but let's be real, deals like this don't last. They are not listed publicly and usually go through direct contacts. So, if you are looking for a rational, well-calculated entry without illusions, message me on Telegram or WhatsApp. We will break down your request and find options that match your strategy. You can find my contact details in the description of this video. Thank you. But the biggest issue was liquidity. When thousands of nearly identical units hit the market at the same time, reselling becomes extremely difficult. And investors suddenly find themselves in a situation where they have to sell at a discount, break even at best, or cannot exit the investment at all. And many people think it's the biggest risk. In reality, it's not. The much bigger problem turned out to be legal and structural risks. In 2023, Bali saw an explosion of new development companies entering the market. Many had no serious construction experience and no properly structured legal framework. As a result, projects were often launched on land where hospitality development was not even legally allowed. The assumption was simply, we will solve the legal side later, and that eventually led to frozen projects, legal disputes, and cancelled developments. Today, there are investors stuck in a situation where construction has stopped, funds cannot be recovered, and projects remain unresolved. One of the most well-known examples is the Park Blue project in Melasti. And many of these problems could have been avoided, because even a relatively basic legal due diligence process costing around 600 to 800 can reveal land zoning restrictions, building permit issues, ownership structure problems, unpaid land and unpaid taxes, and all other critical legal risks. But most investors simply never do this verification. And finally, there is another issue that very few people openly discuss: cash flow problems inside development companies. Bali is one of the few markets where people can launch projects with almost no real capital behind them. I have personally seen situations where a villa concept is created in the morning, units are sold at an exhibition the same day, the first client payments are used to secure the land, and the entire project then depends entirely on future sales. The moment sales slow down, the money disappears. Construction stops, investors stop paying, and projects freeze. And unfortunately, this is not rare. It is a systematic issue within the market. But I'm not telling you all of this to say that Bali is a bad market. Actually, I believe Bali remains one of the most interesting real estate investment markets in the world. But there is one thing you must understand. High returns always come with high risks. And if you don't understand those risks, you will pay for them financially. So the real question is not whether Bali is worth investing in. The real question is whether you are prepared to approach this market correctly. And that's exactly why I'm creating this series, so you can enter the market with a clear understanding of where money is made, where money is lost, and how to avoid the mistakes most investors make. In the next videos, we will cover how to choose the right market and whether Bali is even the right fit for you, how to select a property based on your investment strategy, how to analyze location and identify high potential areas, how to evaluate developers and understand who can actually be trusted, how to reduce legal and financial risks. So subscribe to the channel if you want to invest with a clear mind, not based on hype, emotions, or marketing promises. See you in the next videos.